Welcome to Season 3 of the Biz Show, sponsored by Invest Choir. Discover what's next with this insightful podcast. And now, your hosts, Barry and Lisa.
Good morning, Barry.
Lisa Manifold, how are you doing today?
You never call me Lisa Manifold. Usually it's Lisa.
It's always Lisa, or whatever. I know it.
Yeah, I feel like I'm in trouble.
Oh, no. Oh, well, I would have thrown the Marie in there then, too. Lisa Marie Manifold. Now you're in trouble.
I gotcha. I'm
That's
doing good.
when I always get in trouble. My mom would be Barry Jean. The Jean is my middle name.
Oh, Barry Jean. Billie Jean. Not my. How does that song go?
Not my lover.
Oh,
Just somebody I met a few years ago.
Barry Jean. Not my lover.
Well, that it's true.
Yes, it's
It's
true.
true.
So what are
It's
we
just
talking
so
about
everybody
today?
knows that we are just business associate. We're good friends, but that's it.
That's right. That's where we
So,
draw the line.
and that's why we're still friends.
Right. We don't mix business with pleasure.
Right. Well, listen, let's jump into this podcast, huh?
Hey,
This is
so
episode 17 of season 3, and today we're going to talk about business structures, specifically, how you when you're building your business, which is right for you, sole proprietor, C corporation, who knows? We're going to kind of talk about those and kind of narrow them down, explain them, and kind of drill into what is best for you based off of liabilities, taxes, credibility, exit strategies, so on and so forth.
quick story, Barry.
Yes, I
I
love
don't know if I
stories. You
I
know
don't know if I
me.
should be saying this to the 22,000 listeners that we have, but
28,000 now.
there might be one of them in there that may have a similar thing going on. Well, when you start being an entrepreneur at a very young age, which I was only 21, um, we didn't have online email, social media, Google.
Are
So
you that old?
we had the library and we had just a very basic curriculum at school. So there was no teaching of running a business or the responsibilities of life, even after you leave the nest and get married. So in terms of financial, I'm saying like there was no class on this. So that's my disclaimer. But I started a business with my husband and we were a sole proprietorship because it was just him and I. And I didn't even know what that meant really. I just had a CPA do our taxes for us. I didn't do H&R Block or anything like that. So we turned our taxes over to him and he's like, "Oh, you owe $30,000 in IRS government taxes." And I said, "What? What are taxes? We're just, we're just making, I thought you made money to pay your bills." I was like, "What? Why do I have to pay the government taxes?" That's how naive and young I was because I didn't know anything about the IRS government. And so I got hit with $30,000. I'm at the age of 21. We're like, where are we going to get this money from? We spent all of our money on our bills. And so we had to do an offer and compromise because our CPA referred us to somebody to do that. And it was very successful, by the way. We only owed $3,000 in taxes. So if you get in a bind, don't just ignore your tax liabilities, which some people do for years and years and years, but you could do an offer and compromise. So with that having happened, we dwelled into the S Corp, C Corps, and LLCs, and we were taught by that CPA they did the offer and compromise, that we had those options to shelter our tax liabilities and to pick one that made sense for our company that we had. We had a construction company, and so we decided to do the S Corp, and that was a huge tax savings on our annual taxes. So best decision of my life. I've been an S Corp for now like decades, and I do save a huge percentage on the self-employment tax. And it's not expensive to maintain it every year. It's $800. It's not a big deal.
Yeah, the S corp is actually probably the best tax. I don't want to say shelter, but as far as the liabilities and stuff, it's the best. But we'll go through each one. And you know what, Lisa? Everybody starts somewhere, and at 21, you're not expected to know, the business world or the world per se, right? You're just getting your feet on the ground, coming out of the mud of being a teenager.
There was no Barry and Lisa podcast show.
That's it. So, but here we are
I
today.
couldn't learn that yet. Okay.
Well, let's talk about each one, and we'll kind of start down at the bottom tier, and we'll work our way up, right? So the first
Start
one
a
is
business.
sole
Mhm.
proprietorship, right?
Exactly. A DBA.
Yeah, basically, a sole proprietorship is you, and you're starting a business. Maybe you have a storefront, and it's like a mom and pop. It's just going to be you and your husband doing the work or whatever. So it's a business owned and operated by one person. And if you're married, it still could be one person. And married people can be a sole proprietorship. Um,
Yes, we were definitely a sole proprietor for a
yeah,
year or two.
yeah.
Yeah.
So the advantages of that are it's easy to start, right? Basically, there's no formal registrations. You might need to get a business license
Business
in your
license.
city. Maybe you do. Some cities don't require that. But if you want a bank account, you're going to need a DBA, right? And a DBA is a document
Business
from,
name.
yeah, it's doing business as is what it stands for. And it's basically saying that Lisa Marie Manifold is going to be known as Willy Nilly Construction Company.
Or InvestCore.
Or yeah, whatever, right? So, and then you turn that into your bank, and then the bank will open up an account for you in that name,
Yes, exactly.
right? So, but you have full control and decision making over it. It's your company, right? And
And you just start operating tomorrow, basically.
yeah, exactly. It's low overhead, low cost and paperwork. But there are disadvantages to this, right? And some of the disadvantages are it doesn't have as much credibility, if you will, right? You know, clients, especially if you want to, if you need investors or something like that, there's no stock to give out. You can create a document giving somebody a percentage of the company or something like that. But in as far as the government is concerned in the states, and this counties and cities, there's no percentages or anything. You are ultimately responsible, even if you have a document saying, "I'm giving this person 10% of the company."
Right.
They don't care
Yeah.
about that. They're coming after you,
Oh,
right?
yeah, that's the whole part that also was a benefit of becoming a corporation because you are protecting your assets. So if you own, houses and real estate, then you are opening yourself up to the a potential client that you're in a disagreement with or a dispute, and they can go after you and sue you, and you could lose some of your assets. So the umbrella of a corporation really protects that, and the S corp will not protect that.
It does. And Lisa, you're just jumping right ahead.
Yeah,
You're
it's
jumping to the end.
the comparison, right?
Yeah. But the one thing too is like if you're trying to raise money and stuff like that with a sole proprietorship, it's really hard, right? Because
You don't have
and
a
it's
business
really hard to get,
FICO score.
yeah,
You're using
it's really
FICO.
hard to get business credit too.
Mhm. Yeah.
So
Well, we've had a lady and a gentleman, Laura, from um, where you're actually able to build your credit FICO on a
right,
business
right.
structure.
They were in season two.
Yeah.
We had them as a guest on season two. Tax purposes, um, you and the company are the same. So when you file your taxes, you're filing your taxes for you and the company as one whole entity. And then anything on your business is going to go on a Schedule C.
Yep. And then you get a huge hefty percentage for self-employment tax, like I mentioned earlier.
15%.
Yeah. It's very gnarly, especially if your business is doing well. The more money you make, the more you owe the government. So
Well, that's the way it
protect your
goes across the board, right?
protect your income and your salary. Protect that by all means, and utilize another structure.
Right. So then the next business structure would be a partnership. um, Similar to what you and I have, right? Where you have two individuals who are not married, but so like you see law firms all the time, Snelling and Schmidt or something like that. However, they're probably an LLC, but
Probably
nonetheless, it's a partnership, right? And there's two
general
types,
partnership. Yeah, and limited partnership.
right? A limited partnership and a general.
Yeah.
And In the general, both people are equally responsible 50-50. In the limited, one person is probably the managing partner and the other people might be investors, right? They're passive, they don't really have a say, but they are a partner, they're getting a piece of the action, so on and so forth. So, you know, the good thing about that is on the advantages, you get to share the cost, right? It's not just one person footing the bill for everything.
Yeah, it's always nice to be able to split up your expenses with somebody else, and then you both equally share the profits as well.
Yes. The thing, it's still a pass through on the taxes. So you're still going to write it off on your personal taxes, even your percentage of the business. But there are some disadvantages too, right?
Yeah, you're jointly liable for anything that may come up in
Yes.
a or hopefully not a lawsuit if you're a
Hopefully
partnership.
not. Those are
Um,
never fun.
yeah, so you're not protecting your assets once again with just a general or limited partnership.
Right. Plus you're sharing the profits as
Hmm.
well. So, oh,
Yes,
I got to turn my phone down, huh? There
I
we
didn't
go.
hear it.
Oh, good. Good, good,
Yeah,
good. So
so
yeah,
you'd be
so the tax,
using,
I'm sorry, go
yeah,
ahead.
you'd be using a Form 1065 and
Hmm.
a Schedule K1 if you are doing your own taxes. Those are
Yep.
the forms you use for that type of entity.
Yes, exactly. And this one, you're going to go to the Secretary of State and file this with the Secretary of State. Um,
So there you go.
yeah. So back real fast just to the sole proprietor. Sole proprietor, you're just going to your local, either your city or your
City,
county offices to get a business license and file your DBA.
right. So you still have to come up with a business name, but you'll put that on your business license with the
Right.
city you live in. Mhm.
Exactly.
Yeah.
What's the next one, Lisa?
Yeah, so we got the LLCs, which is so popular in real estate and business because a lot of people use an LLC to purchase property and to formulate a company, a corporation. It's kind of um, a nice structure, that offers partnership with other individuals under the LLC. It could be used with a husband and wife. I mean, anyone could really have one. But yeah, there's some great advantages to that.
Yes, there are. And this is where now some of the limited liability starts to kick in, where, you do have liability, but it's smaller, it's limited, not like you are in a sole proprietor.
I think it's a lot um, easier to structure that, maybe a lower cost annually to have an LLC um, versus the S Corp, right, or the C Corp.
Well, and the things are now we're getting into the realm of you can structure your business in other states, but still
Yeah,
operate in a different state. For instance, there's a long time you always heard about Delaware Corporation, right?
yeah,
Because
exactly.
Delaware didn't charge anything a long time ago to incorporate.
So, Barry, a lot of savvy investors will start their LLC in another state like Montana or something because they want to be subject to taxes there. And then they file their taxes there. And they may be doing a lot of business in California. I'm not saying people do that, but people do that.
I'm not saying people do that. Hint, hint, hint. Oh, yeah, I get it.
Yeah, when you're savvy, you got to be creative, right? So
Well,
this one way to
yeah,
be.
exactly.
Hmm.
No, and here's something people don't know. Because the term LLC is just kind of thrown out there very loosely, but there's actually 10 different types of LLCs, right?
Wow. Yeah.
So when you're filing the application for a LLC, you're going to have to determine whether you're a single member LLC, a multi-member LLC, a member managed LLC, a managed a managed member LLC, a professional LLC, a series LLC, a professional, a low profit, a domestic, a foreign, or if that LLC is going to be taxed as a S corp or a C corp. So those are the 10 different ones. And really the first couple are self-explanatory, right? A single member LLC is just that. Multi is that, but member managed is by uh, the people who created that LLC are the ones that are doing the day-to-day operations on it. And then there's a managed LLC, and that's where you actually appoint a manager who's in charge of that LLC. A series LLC is, and a lot of people, this is the ones where the people get stuck at. That LLC, a series LLC, allows you to create sub LLCs underneath it. So you create that umbrella. And then that umbrella, then you can have, XYB business, and then, a subsidiary of so on and so forth. And you can have 3, 4, 5, 10, 100 different companies underneath that one main LLC.
And if you file it one way, you can always change it for the following year by doing some
That's
paper.
the good news. Yeah. You can even change it during mid-year, but there's going to be more filing. I mean, there's more filing fees anyway every time you change it.
Of course. Yeah. So
Um,
that's not just stuck in that option, then have to create a whole nother one. You could actually make a change or amend it if your business grows or you go in a different direction.
yeah. Two other LLCs I mentioned was the domestic and the foreign. And surprisingly enough, they're not what you think they are. Domestic is a LLC that is operating in its home state, and a foreign LLC is as we mentioned earlier, with Delaware, but or Montana, but you're operating in California. So that's actually a foreign LLC
Correct.
because you're not operating in your home state.
Yeah.
Whew. All right.
So, I mean, with every company, you still have annual filings and annual fees, except the sole proprietorship, right? You'll still have some of the fees to keep the LLC active.
Yeah, yeah. Every year you're going to have a fee to keep it active, and of course you have annual filings and stuff like that, just like you would in a corporation that you got to send to the Secretary of State. You know, so yeah, definitely things. The things are, and there's a couple different things here on the LLC. Now the tax pieces, right? You can just do the LLC and everybody files their own taxes and their portion of it. So if the company makes 100,000 and you've got 4 members and they all have 25%, then each of them are going to claim 25% of whatever those revenues are on, or I shouldn't say the revenue, but 25% of whatever the net is on their taxes. Or
Right.
you could be choose to be taxed as a S corp or a C corp, which then switches things. And now it's I mean, it is an entity in its own, but now there's additional tax burden, not the tax burden, but there's paperwork that the LLC has to do to send out, information to all the members so they know what they need to file on their taxes.
Right. And some investors, if you're seeking funds, they may not want to invest in an LLC company. They may want to invest in a corporation. So that's just, one of the disadvantages that you might think about if you're seeking money from an investor.
Well, this is true. Most all investors want a C corp, right? They want the full blown C corp. S corps are okay, but they're really looking for C corps. That's the golden ticket for investors. And
We'll
I'm
get into those differences between the S and the C Corp.
and we're about to do that now, right? The thing to keep in mind is you also are going to file with the Secretary of State, and then you're going to also get an EIN from the IRS.
The employer
Employer
identity number, which shelters
identify.
having to provide your own social security number. So it's a benefit.
Yes, exactly. Exactly. All right. So the next one, the fourth type of business structure is a S corp.
It's my S Corp. I love my S Corp.
Yes. Honestly, S corps, if you're a smaller company, that's the best way to go. I mean, you get a lot of shelters from taxes, especially you don't have to pay self-employment tax and all that other stuff. You still got to pay taxes, yes, but it's different. It's a lot less.
So you don't even need to have, 10, 12, 15, 20 employees. If you're an S Corp, like I was for many years, solo operating it all by myself, I just named myself the CFO and I got paid a salary and I identified the salary that I wanted monthly. And then I just hired a payroll service and they, cut me a check as if I'm working for an employer and my employer is my S Corp. So therefore my taxes are taken out of the check. I don't have to worry about the tax, liabilities at the end of the year unless I exceeded my income from the prior year. And it just really eliminates the headache and the stress of, the huge tax liabilities at the end of the year because you're operating under the corporation as almost like an employee.
Right. And it avoids double taxation, right? Um, because in the sole proprietor and all the ones prior to, they're not necessarily the LLC, but there are double taxations, right? Or can
Yeah,
be double taxations.
nobody wants
Definitely
that.
you want to work with a CPA to get that all figured out.
Yes, we want to avoid the double taxes.
Yeah, who wants to pay instead of, 10%, 20% in taxes?
Right.
And basically, that's where the company's paying, but then you have to turn around and pay it too. It's, crazy. Um, but yeah, as you said, you're just paying yourself a reasonable salary. And I've done the same in the past, right? Where I'm just an employee.
Oh, yeah, I don't make much. I don't- I pay myself a very reasonably low salary because I don't want to have to be taxed on that salary. So I just shelter it in the S corporation, and just live within my salary means. But yeah,
Right. There are some disadvantages, right? And the disadvantages are you only get issued 100 shares in the company. That's it, period. So each share counts, and you got to make sure that, when you're giving out shares, how much you're giving out, right? Um, those, and that's why a lot of investors don't like S corps because there's only 100 shares, and if they're coming in, depending what your cap table might look like, you know, um, you might already have 75% of your shares given out to people, and now they're coming in and they want 50%, but they can't get it.
there's nothing left. Exactly.
Yes.
Hmm.
With the corporations now, the S corp and C corps, lot more red tape, more compliances and formalities that you need to meet on those things.
Hmm. Yeah,
And
paperwork, paper.
right, right. One other thing is also on the stocks is on the S corp, you only have one type of stock, period.
Right.
So when you go to a C corp, there can be preferred stock, common stock. There can be a couple different types of stock, and one stock might have a higher value than another stock. There's also stocks in voting and not voting and things like that.
So it's more complex, definitely different layers that you
The
won't get with other.
the
Uh,
S corp is made more for the smaller corporations who have a few partners involved in it. They have their stock or shares in the company, and but it's not. And by the way, an S corporation cannot go public, right?
right.
So you are not going to go IPO and be the next Facebook or anything like that as an S corp.
No.
However, you can change. You're going to file a change, and then you're going to go to an S corp, a C corp, and then go. We'll talk about that next. But just to finish this thing up, um,
Corporation has to file taxes, and then you also have to file your personal taxes because you're being paid as an employee. So there's two sets of tax returns, which
yes,
could increase in expenses for you.
yeah. If definitely if you're one of the partners, then yeah, you're going to kind of have to separate those and file twice.
Right. Yeah.
But it's good. And still, here you're going to go to the Secretary of State and file there, and also you're going to need that EIN number from the feds too, right?
Right. So you definitely would need, your separate bank accounts too, one for the corporation and one for your personal direct deposits or your salary to go into. So you
Right,
definitely keep those separate, whereas a sole proprietor, you may not have to have, or you may not choose to have two bank accounts.
right. Other
Mhm.
things that now come into play is you need articles of incorporation, bylaws,
Yeah,
um, board members and their regulations. You got annual filings to do with that. The same as the C corp, the S corp. You're going to have to do the same thing.
that's right. So let's dive into the C Corp, Barry.
Let's dive in. All right, let me get my snorkel out and my mask. Plug my
Okay.
nose.
It's definitely a separate entity and it pays its own taxes.
Yep.
That's the C Corp, and the advantages are great for raising capital or issuing more shares. Like Barry mentioned, you have the more unlimited amount of shares that you could issue to potential investors.
Yeah. So in a couple of the corporations that I had in the past, we had one of them had like 10 million shares, another had 100 million shares, right? And then those share price, because if you're going to go public, you need to open that up to the public. You might even need, 10 million shares or whatever the case might be. For World Intermed, we had 100 million shares.
Oh, wow. Amazing.
So,
So cool. So what VCs prefer it and institutional investors prefer to associate with a C Corp.
yep, yep, yep. Um, those that's the golden ticket for them, right? They typically don't invest in anything other than C Corp. So if you're interested in getting money from venture capitalists, private equity, so on and so forth, at some point they're going to tell you you need to file and become a C Corp.
Right.
All right. Um, but the shareholders is almost unlimited. You can have the multiple stocks, the different types of stocks, as I mentioned, preferred, common, so on and so forth. Um, Formalities, you must have board meetings, and those board meetings, you need to file the board meetings every month with the Secretary of State.
Yeah.
So you don't have to file them every month, but when you do your filings, those have to be included. So you pile them up and then boom,
Yeah.
you submit them right all at once.
So
But you
you
got
have more, yeah, you have more diligence that you have to pay attention to maintain your corporation and be in accordance with the rules of having one.
yep, definitely so. So and the same things go for the filings there, right? You're going to do the Secretary of State. You need your IN, articles of incorporation, bylaws, all that stuff, um, are mandatory, just like they are in the S Corp, but even more so in the C Corp.
There you go. Yeah. So when to switch. So how do you make a decision on under what type of structure that you want for your business? I think it's kind of self-explanatory, right? Because we just went through each of them,
It
but
is.
you may want to switch from one to the other.
There's a golden number for most of these, and it's $60,000, right? When your company starts making more than $60,000, you probably want to become a
S corp.
an S corp because that's going to really save you a lot in tax money, right?
Um,
And then when you start and your company starts growing, then you need to structure probably from the S corp into the C corp, if only if you are planning to go public.
yep.
If you're not planning on going public and you're not planning on getting money, raising money and stuff like that, there's no reason to go C corp. It's just more headaches for yourself,
Exactly.
right?
Exactly. I like to keep things simple. So
Right.
what are some red flags?
Well, red flags, that's a good question. When you're starting to hire a lot of employees and stuff like that, you want the protections that the S corp and a C corp are going to have. Um, as well, when you're looking for investors, if you're looking for
Mhm.
investors, then you need to take a look at what's that, and then also what your legal protections are.
Yeah. And most people consider it when their profits are climbing, which is a great thing.
Yes, because when your profits declining, again, if you can hit that S corp, you're going to pay less in taxes.
Yeah, we want our profits to climb. So it's a wonderful thing to have to switch into an S or C corp. Definitely do that. Don't wait. You'll just be like spending more money on your taxes and giving it all to the government. So we can provide some resources for you if you need to seek an attorney to structure and do the paperwork for you. Just reach out to us.
Yes, absolutely. We have attorneys that we partner with that can help you, as well CPAs and accounting and bookkeeping people too.
Yeah, my son is actually looking into structuring an S corp right now, so helping him do that as we speak.
That will be good for him. So again, we've mentioned companies, or not companies, but entities that you will need to go to, create these business types, right? Your home, your city, your county office offices, they're going to have the county register and stuff like that. You'll go there to file for your business license and your DBA. Other than that, then you would probably hit your Secretary of State if you're going to do LLC, or I'm sorry, partnership or above. IRS is where you're going to go for your EIN.
And your attorney provide all of those, systems for you and put all of that in place for you if you do hire one to structure these entities. But Barry recommends LegalZoom or Clerky as well.
Yeah, well,
Or
those
InvestQuire.
those are legitimate companies that can really help you, right? Um, and people, again, they've heard about Delaware, also Nevada, and a few other states. Do your research, right? Make sure that you go out and you check to see what is best for you in your situation. So it's hard for us to, or Lisa and I, to sit there and say, "Oh, just file in." Well, Delaware is not as good as it used to be anymore. Um, but it's hard for us to say what's right for you, depending on the type of business you're in, what you're looking to do, and stuff like that. It's different for everybody.
Oh, great. Yeah, it's wonderful to have a conversation. So we're always here for you to have that conversation and kind of just think outside the box. Maybe when you talk to people or business consultants like Barry and myself, it help you arrive at that decision of where to file and, even what type of structure you want to put in place. And so, it's always a great thing once you do it because you want it to feel like, you chose the right one because you want it to suit your needs and your personal and business goals and your growth strategies.
Yes, exactly. All right. Well, I think that's all we really got for this episode.
Yeah, it was great talking with you, Barry.
It's always good. We talk every day. What are you talking about?
Oh, it is a daily thing. We have a growing business ourselves, so we're going to have to look into a structure shortly.
Yes, yes. So, all right, guys. Well, thank you so much for tuning in and listening to Lisa and myself. Again, this is the Biz Show. You can reach out to us at investquire.com is our company. You can find Lisa and I there. We also have the Biz Show group on Facebook, and you can find both of us there.
Yeah, please subscribe so we can increase our audience.
That will help us immensely.
Hopefully, we'll see you soon. We're talking about going on video, so that'll be fun.
Yes, soon. By
Yes.
the end of this year, we'll be doing video.
Yep, that's the plan. All right, everybody, have a great day.
Bye.
Bye.
Thank you for listening to the Biz Show podcast. Subscribe to stay updated and follow Barry and Lisa on Facebook at The Biz Show. Share your comments or suggest specific business topics you'd like to hear. Bye!